Finance. It seems hard to learn. But is it really? Wall Street likes to overcomplicate everything money related, confusing a lot of people. Join us on this podcast as we help break down the world of money for you to understand from a relatable perspective. This is Finance Simplified. Hey everyone, how's it going today? My name is Rohan and I want to welcome you to today's episode of Finance Simplified, the official podcast for Street Fins. We have an amazing guest today, Tim Draper, who is the founding partner of Draper Associates and one of the biggest crypto investors today. We'll be simplifying cryptocurrencies, something you guys may have heard just a little bit about on the news lately. Tim has been investing in game-changing technologies for over 3 decades now, and in this episode, we get to pick his brain about blockchain and cryptocurrencies. So let's just get started. Tim, welcome to the podcast.
Great. Thanks for having me, Rohan.
So I want to get started with your background. You come from a family of venture capitalists, and I'm wondering what led you to continue the family legacy and get into venture capital?
Well, it's kind of the last thing I wanted to do because my grandfather and my father were both venture capitalists. My grandfather was the first Silicon Valley venture capitalist, and my dad was a real pioneer in venture capital. And so I was sort of thinking I'd be an entrepreneur. And when I came out of business school, I realized that my temperament was more one for supporting entrepreneurs than being one. And because I had lots of ideas for entrepreneurship, but I didn't have it in me to dedicate myself to just one concept, one idea. And so that helped me think about it. And I thought, my gosh, my dad and my grandfather were in really interesting fields. Maybe I should do that. So it wasn't obvious. And certainly, I mean, I understand a lot of you are in high school. I was just focused on girls and sports in high school. That was kind of it for me. So you're way ahead of me if you're even listening to this podcast.
So how did you get into cryptocurrencies?
Well, in 2004, I had a great conversation with this guy from Korea, and he said, half the country is playing this game, and I think it was called Legend or Legacy, something like that. And he said, yeah, I even have to hire a guy to be my avatar when I go off to work. So this other guy just is my avatar. And so he was showing me in that way. He showed me that people are going to live both in the virtual world and in the real world. And think about that. Back in 2004, we really didn't have any of these massively multiplayer games. And this was just the beginning of these games where you could participate with all these other people. And so when I started to think people are going to live in the virtual world, that's when I started to think virtual world, virtual real estate, virtual money, virtual everything. And that was really exciting for me. And so I focused on that, looked around for a lot of things. And then when Bitcoin came along, well, first there's virtual money in some of the games. And I thought maybe somebody would create a currency by having their virtual currency cross over with another game's virtual currency so that they could have an exchange rate. But that never happened. But then Bitcoin came up, and that was a major change. And I got very excited about it because I thought, well, this is a universal virtual currency, can be used anywhere, not even inside a game. It can be used outside in the world. And people were starting to buy things with it, and it was very, very exciting.
So the way you would define cryptocurrencies is basically like virtual money, virtual currency, as compared to like fiat today.
Here's the way I would describe it. Way back when, if I wanted to trade, let's say you have the farm and I have the house. And if we don't do a deal, I starve and you die of exposure. So we've got to create some liquidity in the market. So the way we have done that in the past is through a third party who holds money, because you'd have to figure out how many pineapples and persimmons and avocados add up to 1 month of rent and figure out how that would work. And banks were this third party that was trusted that could say, okay, well, you price the avocados and the persimmons and the pineapples, and I'll price 1 month of rent in my house. And we'll cut a deal that it doesn't make me eat, only those three fruits or vegetables. I can eat some of those, but then I give you rent in exchange, and you give me a little bit more so that I can go out and buy some meat or something else that I want to eat. And so that's how currencies started. Well, then the banks became quite powerful, and then the governments got involved there, where the banks were kind of unregulated and ran a little wild. Then the governments came in and created a central bank, and that central bank helped decide, like the central bank would loan money out to banks at a certain rate. The banks would take that money and loan it out to all of us. Well, what happened then was the banks and the governments became very heavy-handed, and they now control all the currency of the world, or they did up until Bitcoin came along. And in some countries, Argentina or Nigeria or Venezuela or many others, the governments became a little abusive of their people, and the currencies would drop in value at extraordinary rates. So, if you have a dollar today, it's like having $1.05 tomorrow or $1.03 tomorrow. But if you have a Nigerian naira today, it's like having 2.5 Nigerian naira in a year.
Right, it's hyperinflationary.
It's hyperinflationary. You end up, the value of that currency becomes so useless that you try to get rid of it as quickly as possible. What happened here was Bitcoin came and said, hey, there are only going to be 21 million of them. And it's global. And so you don't have to be tied to a government or any kind of political force. You can be just open and transparent and global, and you go across borders. So here's a currency that is not affected by government. So let's say you're in Syria and you're a wealthy family in Syria, and the military comes in and pushes you out and says, get out of here. Well, you've got Syrian money. You go into Greece, and you're now a refugee, and you have Syrian money, which no one will take. And so you're out of luck. But if you had some portion of that money in Bitcoin, you could just go to Greece and start your life over with your Bitcoin. It got me incredibly excited, because suddenly there was a currency that was digital and virtual, but it was also not tied to any political force. So it's not tied to these people in government who have, really tell us all what to do. And I love the freedom of it, and that it was open and cross-border, and I like that feeling.
Yeah, it's a strong argument to use because it preserves wealth across borders, across countries. My wealth here in America can be taken to any other place, and it's not really affected by any political and economic forces. I want to learn more about the technology that's powering this, the blockchain. So could you talk about that?
Yeah, the blockchain is, just think of it as a piece of software that keeps a perfect record of all of the money that moves in and out of it. So if I have a Bitcoin and I give it to you, you now have a Bitcoin. But how did we keep a record of that? What happened? Well, what happened was the Bitcoin was in my wallet, which is just a series of numbers, where a wallet can be stored with a series of numbers. And that's my private key. And then you give me your public key, which is your key that says, here's my wallet, go ahead and deposit money into it. So then I deposited it into your public key. And when that happens, there's this blockchain which keeps all those transactions. So it says this money was just moved from this wallet, and that wallet is defined by my public key, to this wallet, which is your public key. And when that happens, all the blockchain miners watch and determine to make sure that that transaction was a legitimate transaction. They aren't actually physically watching, but their computers are verifying every transaction that goes through that blockchain. That turns out to be really valuable, because all the accounting can be done without anybody counting the money. And the other thing that happened was people realized that that blockchain kept perfect records, but also perfect control of data. And so the blockchain can be used for more than just currency. It can be used for anything that comes in the form of data, your medical records or where you live or how many traffic tickets you've had, all those things. That can be kept on a permanent record.
Tim just gave an overview about how the blockchain is so secure for data. But how exactly does it achieve this level of security? Tim mentioned that Bitcoin miners have something to do with it. So let's delve into exactly how Bitcoin miners keep the blockchain secure without going too far into the super technical details. The total supply of Bitcoins there will ever be is set at 21 million. That doesn't mean they're all in circulation right now though. Bitcoins need to be brought into circulation somehow, and that responsibility goes to Bitcoin miners. Bitcoin miners mine for Bitcoins by using complex software to solve intricate math problems. Due to how the blockchain is structured, when someone makes a transaction using Bitcoin, it needs to be verified, and miners solving these math problems is the process used to verify transactions. To solve these math problems, a miner's computer needs to be exceedingly high-powered and fast, which often requires a lot of energy and power. Once a miner's computer solves the problem and verifies the Bitcoin transaction, the miner is rewarded with newly created Bitcoin. This increases the supply. However, just as in the gold rush of 1849, there are many miners seeking to strike it rich mining Bitcoin. Since there needs to be a limit on how many Bitcoins can be mined at a certain time to prevent inflation from an oversupply, the math problems become harder to solve as more people are mining to prevent inflation in the supply. Imagine it this way. Bitcoin miners use their pickaxes, which are their computers, and the mining software they are running, to mine gold, or in this case, the Bitcoin. The ground on which they mine is represented by the math problem, and the deeper the ground, the harder the math problem is to crack. The miners with better tools can dig deeper and last longer, while others give up and lose. In the case of Bitcoin, the miner who strikes it rich just also has the added task of verifying transactions. There's quite a lot of technical processes that are just too complex to get into in this episode, but that's a simplified explanation of Bitcoin mining. Back to the conversation. Yeah, so the blockchain's just the nitty-gritty technical parts. It has a lot of those, but in essence, it's a perfect unchangeable ledger. Like what goes in is verified and it's kept there in truth forever, basically. Could you talk a little bit about the process of how these new cryptocurrencies are created?
Well, Bitcoin was made as a software package on this thing we call the blockchain. But if you wanted to create a new cryptocurrency, they call it an ICO, an initial coin offering. You can actually just create one. You can say, I got Rohan coin, and I'm going to give Rohan coin to all of my friends, and they're all going to have it. And so now, whenever we do each other a favor, we can trade in Rohan coin. And then as Rohan coin becomes more and more popular, it will spread and become a more recognized currency. To start with, it has a little utility, but it is not a real currency. But long term, people all over the world might be using Rohan coin, and that coin will increase in value as more people use it. So similarly, Bitcoin, when it was started, there were 21 million of them out there, and they were worth 3 or 4 cents a piece. But they started to use them more and more and more, and they became more and more valuable as more and more people used them. It's called a network effect. If I own all of the Rohan coin, then nobody else gives it any credence. Then my Rohan coin's worth 0. But if there are 2 of us that recognize Rohan coin, then it's worth something to the 2 of us. If there are 3 of us, there are 3 connections. If there are 4 of us, there are, 6 connections. And if there are 5 of us, there are 10 connections, 6, 15 connections. So as there are more and more connections, that currency becomes more and more recognized, and it becomes more and more valuable. And so with Bitcoin, you can see how people have Bitcoin wallets, the value of the currency just continues to move up. It gets very volatile, but long term, you're going to see real growth in Bitcoin as it gets used more and more, real growth in the Bitcoin price. as it's used more and more, just as it would be with Rohan coin. So it's very simple. You can, just as though you were trading in shells or rocks or whatever, you just get other people to recognize something as currency, and you can create your own currency. Thousands of people have done that. And what's happened is some of those currencies really weren't worth anything. And so people have kind of consolidated around Bitcoin and maybe a few others.
So one of those other cryptocurrencies that is out there today is Ethereum, and it sort of is known for a smart contract. Could you explain what a smart contract is too?
Yeah, if you and I make a bet, and I bet on the 49ers and you bet on the Seahawks, and we each put a Bitcoin into the bet, a smart contract would be in software, completely built into the computer, that when the game comes to an end and the 49ers win, then both those Bitcoin come. Wait, did I bet on the 49ers? Anyway, they go to whoever bet on the 49ers. And so that's the simplest smart contract you can think of, is just a bet where there's an outcome that is deterministic. It determines exactly what happens when when the event takes place. Another good example of a smart contract is life insurance. You pay your premium every month and then you die. And when you die, that's an event. And then the payout from the life insurance comes. And that can be done automatically. It doesn't require a big insurance company or anything. It just can happen completely in a smart contract. But smart contracts can get even more complicated when you use artificial intelligence. Your home gets wiped out in the hurricane. Well, the artificial intelligence can analyze that, yes, the winds hit 112 miles an hour as they blew through your block in southern Mississippi. And so it's very, very, very likely that your house is wiped out. So we're going to pay that claim. But if you claim that happened, and the hurricane was in Mississippi, if you claim that happened and your house was in Texas, the artificial intelligence would say, well, that's no good. That's a fake claim. And they probably cut you off as an insured person.
So Tim gave a brief overview of how smart contracts work with bets and with insurance. So let's take a look at how they work with cryptocurrencies. Smart contracts underpin more popular cryptocurrencies like Ethereum. Smart contracts are basically lines of code that represent rules for some kind of agreement to do something between two parties that is executed by the blockchain. One example is the bet that Tim talked about. Another example may be a generic financial transaction, such as sending one Bitcoin to your friend on a certain date at a certain time. The key benefit of smart contracts is that they remove the third party from the agreement, which saves costs and reduces the chances for fraud or mismanagement. For example, with smart contracts created to sell your house, you would no longer need a real estate agent to find a seller and buyer because the terms of the sale of the house are already coded in a smart contract. That would save whoever is selling the house money because he or she does not need to pay a real estate agent anymore. So, in essence, smart contracts are basically lines of code that specify the terms of an agreement between two parties, much like a physical contract. But because it's on the blockchain, it can self-execute that agreement without a third party. That removes the need for that third party, which streamlines and cheapens that agreement. Back to the conversation.
So using artificial intelligence, you can start playing around with the idea that artificial intelligence can take everyone's job, at least the mundane tasks of everyone's job, the tasks that they have to do over and over and over, those should be able to be done by artificial intelligence. So it's going to be really interesting watching the world or being a part of the world where you combine Bitcoin, blockchain, smart contracts, and artificial intelligence, and it has a way of transforming the insurance business, but it also changes banking, who you lend to, all that stuff. The big change is that a lot of what government does and what you see government doing through the press is really just providing an insurance company for the people. And it's whether it's healthcare insurance or Social Security or Medicare, they're all insurance, but you can replace all of those government entities that are in any way tied to insurance with artificial intelligence, Bitcoin, and smart contracts. This is going to be you are coming into the world at one of the most exciting times that the world has ever seen, because we've always been very tribal. We've always been tied to our geographic borders, but the world really opened up with the internet. It became global. And now with Bitcoin, there is a currency that transcends borders. It goes across borders. So we're not really going to be tribal anymore. We're going to be global. And so governments are going to have to think about competing for us instead of us doing everything the government tells us. They're going to have to start competing for us so that we stay with them. They're going to have to provide better service than the other government nearby. I'm excited about what that could do for the world, where, you would no longer put up with a dictator unless that dictator was providing incredibly great service. So for you, it's going to be very different from what it has been like for me. So for you, you've got, it's, I don't know, roughly 40 years from where you are to where I am. And during that 40 years, some amazing things are going to happen. And many of them are because of Bitcoin, blockchain, smart contracts, and artificial intelligence. So spend a little of your time, not too much, but spend a little of your time figuring out what those 4 things are.
I look forward to that future. It sounds exciting. So you have 4 kids and 3 of them have turned out to be VCs. As a podcast that is made for students right now, what lessons did you give to your kids about finance and investing in the world of money when they were in high school or maybe just starting out in college?
I think it was really important to make sure that your kid has an allowance. I also had all my kids, I gave each of my kids 1 share of some stock. And then I started getting them to think about portfolio and that sort of thing, stock portfolio. If I were starting again now with those kids and they were in high school, I would make sure that they had a crypto wallet with at least 3 cryptocurrencies in it, and Bitcoin being one of them. And then I would probably have them buy one stock in the public market and 1 stock in the private market. And I think that would be enough for them to just sort of get their feet wet. And then longer term, I would want them to learn how to read financial statements. And they're not that hard. The math you're doing in high school is much harder than reading a financial statement. So I kind of encourage you, or your parents to encourage you, to get an annual report from, say, Apple Computer or Nike or McDonald's or something, and take it one thing at a time. And I think that could be a great start for you. But mostly just, you're in high school, have some fun, get to know your friends, keep yourself healthy. And anytime you think that it's the end of the world, it's not. I'd avoid doing anything that can hurt your brain cells, but that's me. Anyway, great talking with you, Rohan.
It was a pleasure talking with you too, Tim.
Glad I'm a part of your podcast.
Hey guys, I want to thank you so much for listening to this episode of the podcast. It truly means the world to us. Please give us your thoughts and feedback on today's episode, what you liked, disliked, and what we could do better. Thanks once again to Tim Draper for the amazing conversation. I hope you learned more about cryptocurrencies in this episode. Once again, we are really happy that you're taking the initiative to learn finance and to better your future. If you'd like to get in touch with us, please email streetfins@gmail.com. And if you haven't already, we highly encourage you to check out streetfins.com for articles, videos, and other content, and to subscribe to our newsletter. Join the StreetFins community and follow us on social media, links in the description, and share us with your friends so that they can learn about finance too. We'll talk to you next time on Finance Simplified.